Are things still orderly out there in the FX markets, or are we beginning to see a little bit of disorder?
I think it depends which currency that you're looking at, but certainly things are very anxious, and I think we all know that. But with respect to the dollar, I think we can look at this and perhaps the medium term, which I think is very complex. Is this going to be the next chapter of de-dollarization, for instance, as countries such as China press to have their oil delivered in World War I? But in the short term, I think it's really quite simple. The dollar has been used as a safe haven. It is liquid. That is what people want. They obviously value liquidity over returns when things get this uncertain. So you're looking at a move into US dollars because of the words escalation, of course, have been used a lot over the weekend. And that, of course, leaves the high-yielding currencies, those of the emerging market space particularly, very vulnerable. It's
essentially the only safe haven out there right now, is it? And why?
Well, again, there is a multi-factor answers to that because, traditionally we would be looking at the Japanese yen, we might be looking at the Swiss franc for those. And neither of those have been performing particularly well since the war began. And Switzerland, there is some fears of intervention. Certainly the central bank has talked about that over the last month or so. And with Japan, of course, that's been on the back foot since October, particularly since we had the new Prime Minister and the market very anxious about the yen. So the dollar right now is playing that game. And we've got to remember that the market went into this crisis short of the dollar. The market had been very reluctant to really go long with the dollar since last April, since the dollar fell out of bed last April on the back of those tariff addresses from Trump last April.